Now, Wenkui, I don't know if you follow US politics, but that person in the White House currently in America often touts that, that during his tenure, the stock market reached new highs. But a lot of people tell him, whether he listens or not, that a high stock market doesn't mean a good economy, and that's what we're talking about this week. So tell me, why does a high stock market not mean a good economy?
Because the current rally comes at a time when we have the weak economy.
Right.
So now in the second quarter, we were in a contraction.
Yeah.
And also in the third quarter, it's likely also to fall in a contraction again. So, I mean, the economic outlook is quite gloomy. So, but if you look back in the 90s, during the bull run, actually the economy was growing at more than 8% according to economists. So the business environment was very conducive for businesses to do business and to make new investments. So I guess this time economists are quite cautious because the economy is not good. So people will still wait and see before they will go for new investments. So even though they make money and gains from the stock market, so it does not really translate into the economy.
But because from what I can tell and the stories that go around, because we all hear it, right? People were making really striking gains, like millions, hundred thousands in a day, right?
Yes, exactly.
So why is it not trickling down to the economy? Are they not spending? Are they all hoarding, or they're reinvesting?
I think that is just part of the population, just a small population who really invest, who really have access cash, to invest in the stock market. I guess for those who are rich, they will have the savings, and the access funds to invest. But for especially the B40 group, maybe they don't have access fund for stock market. So
I think some of them don't even know how to go in to the stock market, to be
true.
honest. That's one main thing. But the one thing that sort of made me, I won't say less cautious, but it gave me an idea, was that the guys themselves did actually say, we know this is not going to last forever, right? They are actually going to be cautious.
Yep.
So is that what the investors told you, that after this ebullience is done, they're going to stop investing, or they're going to reinvest, or what?
Yeah, but some say they will still reinvest, but it depends on the market situation. I think now they will go for more short-term kind of trading in terms of long-term. Maybe just in the day, you're in the morning and out in the evening.
Day traders.
Yeah. This is something, a new investment strategy for the investors, especially if you invest in penny stocks that are with higher risk.
So what happens is, maybe once they see things settling down, they'll switch to the long-term investment. So you're talking about buying stocks for years back again, right?
Yes, maybe they will look back at stocks with good fundamentals, like the blue chip stocks.
It's no surprise, of course, that healthcare and tech have done well. In this entire issue. We see the news, and it's the most read every single day, actually. What other sectors, after all your data crunching and everything, also did fairly okay that you're a bit surprised by?
Of course, we have seen a lot of penny stocks. The share prices have gone up sharply. So especially those who have announced ventures into these COVID-19 related sectors, whether PPE, glove, or vaccine.
Vaccines,
Yeah, so these are the stocks actually that are the outperformers in the past few months. So, but still analysts are quite cautious about these companies, whether their venture are really genuine or not. So it's really depends on, it's up to the investors to really make the decision whether to invest in this kind of stocks.
For more on the stories, pick up a copy of The Edge Weekly at all good newsstands.